Hey everyone, I sure love dividend stocks. Over the past week, I purchased 3 more dividend stocks. I added to my positions in Church & Dwight, Kimberly-Clark, and Campbell's Soup Company. All 3 of these are really stable stocks in my humble opinion, and they provide an amazing foundation to my portfolio. And I think it's so important to emphasize this foundation because the topic of the video today is actually the topic of speculation. And I like to speculate in the stock market sometimes. I reserve about 5% of my portfolio for speculation. And I'm going to discuss that in the video today. Now, the video today, it builds on my last video where I actually shared how I have lost some money over the years in speculative investments. And I discussed the lessons that I learned from those large financial losses. And so I'll include that in the description below, a link to that video if you would like to check it out. And the topic that I want to cover today is how so many investors look at speculation the wrong way. And so many investors are speculating with a lot more money than they think they are. And so for me, I have devised a strategy. In fact, I have a free spreadsheet for all of you to download, so I highly encourage you to follow these steps. First and foremost, please smash that like button. It means the world to me. Second, please go ahead and click the subscribe button. I have so many more videos on the way, and you do not want to miss out. Third, please go to the description below and you can download that Excel spreadsheet and follow along at home as I go through the video today. It's easy. Literally just click the link and it will direct you to the Excel spreadsheet. No need to provide an email or anything like that. And so I'm going to go over my speculation framework today. I'm going to go over why so many people, most people out there are speculating, putting money at risk, high risk, a lot more money than they think. I'm going to talk about cryptocurrency today and my position in Bitcoin and other cryptocurrencies and crypto tokens. I'm going to discuss those dividend stocks that I am buying very aggressively and so much more. Get ready, everyone. I have an exciting video for all of you today. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So I think it's going to be best to explain what I'm trying to explain through examples. So check it out on the screen right now. This is basically the hypothetical investor persona that all of us know too well. And so this hypothetical investor has been around and been investing for a long time, all the way back since 1999, maybe even before then. And this investor in 1999, 2000, unfortunately put a lot of money into pets.com. Now, that sum of money was 5% of the stock portfolio at the time because that investor felt, hey, I'm going to speculate. I want to be somewhat conservative and not put more than 5% of my money at risk. That being said, I want to put 5% because it's a meaningful amount of money. And if that pets.com stock goes up 20 times, I'm going to make a lot of money on that. Now, unfortunately, pets.com crashes, goes under, the investor loses all of his or her money, and it's a done deal. And at this time, this is a key insight. The investor tries to forget it. Even in the last video where I was going through some of my financial losses, the biggest ones that I've faced, I really didn't want to do the video because a lot of those losses, I had blocked them out. I had tried to forget them. I had tried to kind of step aside from those losses and focus on the future. And so many investors are like me. They want to forget the bad stuff. They want to remember the good stuff. And so let's keep going with the example today. Check it out on the screen right now. And so now it's 2007. It's been quite some time since the investor lost all that money on pets.com. Unfortunately, it's right before the great financial crisis, but the investor doesn't know what's around the corner. Everything's looking really good, and the investor puts 5% into an angel investment. Let's say that angel company at the time that investor was investing in was related to the real estate industry, perhaps even subprime mortgages. It's kind of a disruptive app, if you will, related to subprime mortgages. Now, we all know what unfolded in 2009, 2008, all around that time during this great financial crisis. And unfortunately, let's say that this angel investment was overtaken, if you will, by evil forces. In fact, that's the explanation I personally received on one of my angel investments that I made from the founder of the company as to why I lost all my money. And so it is not too out of the ordinary to hear something like this, unfortunately, with angel investing. But unfortunately, in this hypothetical example, the investor lost 5% again. And the investor is like, well, I'm only risking 5% of my portfolio. But you can already see what's happening here. It's not that just 5% of the portfolio is at risk. It's actually up to 10% now, assuming the portfolio hasn't grown over time in other investments outside of speculation. Now, let's say it's grown a bit. That 10% gets diluted. But you see here pretty quickly that because the investor each time is trying to forget his or her mistakes, this 5% is ballooning bigger and bigger. Let's keep going. Check it out on the screen right now. And so next, hey, it's 2017. A lot of time has passed and that investor forgot all about his or her prior losses. Bitcoin is at $17,000. It keeps on going up. The investor says, hey, I have 5% of my portfolio for speculation. And so the investor allocates 5% to Bitcoin in 2017 at 17,000. And the investor feels good because it went up even higher from there. Unfortunately, in 2018, Bitcoin tanks. The investor ends up selling at 6,000. And then Bitcoin falls even further, all the way down to the 3,000s. That's where I actually started buying the current position that I own in Bitcoin in late 2018. But at the time, this investor feels really good because unfortunately, he lost all of this money, but at least he didn't sell at the bottom. But we all know what has happened to Bitcoin when we fast forward to 2021. The reason I'm making this illustration here is because so many of us, in one way or another, obviously this is a very polarized, a very exaggerated example, but psychologically as humans, we sometimes will box out the bad stuff and focus on the good stuff. And a lot of us may be thinking, hey, we're only allocating 5% to speculation, but it ends up becoming way, way, way more than 5% when you compound the losses over the years. Now, this especially becomes an issue for investors who are consistently losing when they're speculating. If an investor has some big wins along the way when speculating, that should factor into the equation as well. Long story short, I want to personally keep myself on target with my own speculation. My foundation is dividend stocks. As a percentage of my dividend stocks, I never want to speculate personally with more than, say, 5%. To keep myself on track, I need to realize that I've had some gains over the years in speculation, but also some losses. And so next, what I want to do is I want to go through my financial model that I use to keep myself on track. So check it out on the screen right now. I'm going to go through the Excel spreadsheet that all of you can download. And what you see on the spreadsheet right now is just, or on the screen, is just the first part. And so the numbers here are all fake. These are just random numbers. At home, feel free to plug in your own numbers. But I just want to go through a random hypothetical example first to explain why this spreadsheet works, how it helps me keep on track, and how it helps me avoid this mistake of this hypothetical investor I just went through who lost the 5% over and over and over, and that 5% is way more than 5% when you add up all the losses. So first and foremost, in this spreadsheet, you'll see that there's just a total approximate portfolio value. I put $100,000 here. I'm just pulling a random number. Now, worth noting, I am including in this portfolio value liquid net worth that is basically in stocks, dividend stocks. It could include blue chip tech stocks, liquid net worth. I do not include in here the value of home, the value of cash on hand or emergency funds. And honestly, I don't even include in here retirement accounts as much, although I think it's okay maybe to include some retirement accounts, maybe at half value. The idea here is to be conservative, because not only do I only want to risk 5% or so of everything on speculation, I want to make sure that I'm not exaggerating what that 5% is. And so for me, that 5%, it doesn't include the house, it doesn't include the car, it doesn't include emergency savings or real estate holdings. It literally is of my dividend portfolio that provides that foundation, that robust foundation of cash flow. What is 5% of that to me? That's how I look at speculation. And then I say, okay, that's all the money I have available for speculation. That's how I look at it. So let's keep going. Check it out on the screen right now. Obviously, that 5% is $5,000. So 5% of $100,000 is $5,000. So the next thing I want to do is I need to go through this model, because the model breaks up into several sections. And the first section is really looking at prior realized losses. And so check it out on the screen right now. And so the first thing is, this will resonate with a lot of you who saw my last video. It was embarrassing to put together the video, but I have lost some money over the years in some speculative investments. Some of them have been very painful, and it is a true matter-of-fact story that angel investment number 2 that I discussed in my last video literally did, according to the CEO, get overtaken by evil forces. That is real, according to the CEO. And so basically what I have here is, with these realized losses, the multiplier should generally be 100%. Most of the time, a realized loss, with speculation, you're going to lose most of it. At least in my case, with my angel investments here, 1 and 2, I'm basically assuming both are 100% losses. And okay, I lost $5,000 on angel investment 1, $5,000 on 2. Now, both of these could have some salvageable value. I know with angel investment 1, it got rolled pennies on the dollar into another company. Angel investment 2, there's still some salvageable value there potentially, but I'm just assuming 100%. I'm trying to be conservative. Now, I also discussed in my last video how we purchased a timeshare. I don't know if it's really fair to even include this on here, because it's more of a financial, you could call it a mistake, if you will. But anyways, you could include frivolous expenses on here just to be conservative. And so I'm carrying a 50% loss on the timeshare, because honestly, there is a lot of value we will get out of that. We will enjoy it. But I'm just trying to keep it real and to be conservative in my modeling as I look at how much money I have for speculation. And so again, these are hypothetical numbers I just threw in here, but basically the total realized losses are $12,500. And you see in the spreadsheet, there's more rows. And so if you've had more than the losses that I included in the hypothetical example, always more rows could be added to tally up the losses. But the key thing, and this is probably one of the most important things of the model, is you don't want to be like that investor in the example at the beginning. You don't want to be the investor who lost money on pets.com, forgot about it, and then all of a sudden thinks he can put 5% of his portfolio into the next big thing. Forgets about it, and all of a sudden thinks he can put 5% of his portfolio into the next big thing. And so this is the key realization, that it's important to document these realized losses as it pertains to speculation. Let's keep going. Check it out on the screen right now. And so next part of my model are realized gains. Hey, there are possibility to make great realized gains with speculation, and this is one of the reasons that we all speculate from time to time, is we believe there's a lot of money that could be made buying low, selling high. This is a very different investment strategy than dividends, although sometimes there can be overlap between dividend stock investing and speculation. I'm going to get to that later when I talk about cryptocurrency and crypto staking. But a lot of speculation these days if you ask most investors out there, is buying low and selling high. And this can counterbalance the realized losses. And so I've had some prior realized gains. I'm just putting in hypothetical examples in here, hypothetical numbers, but many of you have watched my Bitcoin videos from the early days of my YouTube channel, and I documented there in real time how I bought Bitcoin, and when it was running up, I saw that running up a bit too quickly and I decided to sell. And so, hey, here in this example, I gained $8,260. Now that does include the gains and the principal, and so it's important you see at the bottom of this table that I segment out the gains from just taking capital out. You'll see more when I summarize this model at the end, but it's key that the capital part of it, it's not the gain. It's just, hey, capital's out. The capital is now freed up to potentially speculate on something else. But the capital out does not counterbalance losses. Only the gains part of this counterbalances the losses. And it's important to make sure that you're not including here realized gains from non-speculative investments. And so generally speaking, I don't sell dividend stocks, but once in a while, once in a blue moon, I will go ahead and sell a dividend stock. And it's really key just to keep in mind with the model that I'm sharing today that any kind of gains from a non-speculative investment should not be factored in here because we're segmenting speculation into its own bucket. And so with that, I have now my realized losses, my realized gains. We're going to go on to the next part of the model. Check it out on the screen right now. And if you're watching or you're following along at home, keep scrolling down on the spreadsheet. I have my current speculative investments. And so what are some current speculative investments that I have right now? Well, I do have angel investment number 3. That one's going pretty well. Although I do have a multiplier. I multiply 25% of that and just assume that I lost that money just because it's illiquid. I'm just saying this is an illiquid investment. Who knows if I'll ever get the money out? Maybe I'll triple, quadruple my money. Maybe I'll just get out what I put in it. Maybe I'll get dividends from it one day. I know this angel company actually talked about paying a dividend at one point, and so I wish they would do that, but they have not yet. But at this time, to be conservative, I'm just assuming I lose $1,250 of the $5,000 I put in. Now, again, I did not put $5,000 into this investment. I'm just putting hypothetical numbers here. I'm using real-world things that have happened in my life with absolutely random numbers that don't pertain to how much I actually put in. Another speculative investment here, I'm just assuming this I don't even own this now, but I'm assuming, hey, I bought some IPO stock. And quite frankly, I'll talk about this a little bit later in the video, but part of my speculative roadmap for this year, for 2021, in addition to the sea of dividend stocks, obviously that's not speculation, that I buy each and every week, I have a small sliver of my portfolio carved out for speculation. And as part of that speculation this year, I do expect to purchase an IPO stock, actually this month in March, and that IPO stock that I'm going to be purchasing when it starts trading is going to be Coinbase. And so that's why I did include this in the model, because I don't own it now, but I will own a speculative IPO stock in March. And so that's going to be exciting for me. It's going to be the only stock literally that I'm buying or that I own that I can think of that doesn't pay a dividend. But I'll get more to that perhaps later in the video or in future videos. Check it out on the screen right now. And so next what I do is I just look, okay, of current speculative investments, what's going on with them in terms of losses. And quite frankly, on the IPO stock, I'm just assuming, hey, after I buy that stock, it's going to go down a little bit. And so I'm going to lose money. And so what I'm really doing here at these current speculative losses is I'm just trying to tally up what are my unrealized losses. And you can also see I tally up money that's tied up. I've got good money in there, not lost money, but it's tied up. That capital is tied up. It'll likely come back, but at this time is tied up. And don't worry, all this will make more sense later in the model when I summarize everything. I bring all these bits and pieces together to really summarize with the magic number and how hypothetically in this random example I'm doing versus my 5% allocation to speculation. But there's one more table we have to go through first. Check it out on the screen right now, everyone. And so the next table pertains to current speculative investments again, but these are ones where there's been some gains. And so some of you may know, especially if you've been on my Patreon. I've done a bunch of videos on Patreon about it, but I am in Bitcoin. I started buying in late 2018. I'm in some other crypto assets and tokens as well, and I'm doing well. I've got some unrealized gains on that, and I have no plans to sell. I'm actually in it for the long run at this point. This time is going to be very different than the last cycle. I do not expect to sell my Bitcoin or other crypto assets, and hopefully I'll have an opportunity to talk about that potentially in my later in the video or in some future videos. I have touched on it on my Patreon. I'll link to that in the description below in the pinned comment if you'd like to check that out. But also in the gains, I just have hypothetical. I have another IPO stock. Put some more money into IPO stocks, and this one, some principal is tied up, but there's been no loss. It's just at a or no gain in this table. Actually, if it were a loss, it would be in the last table, but there's no gain. It's just carried at the value I put into it because it hasn't gone anywhere. And so in this final table of current speculative investments on the gains, you can see there's a gains component and there's a capital component. So I have $5,000 of capital tied up, and I have $10,500 in unrealized gains. And so now, after doing all of this work, and quite frankly, it should be quicker for you at home because the model is there. You just have to put in your own investments and your own numbers. The fun part begins, and I can actually start to summarize all of this and see, where do I stand? Where do I stand as compared to where I should be? So check it out on the screen right now. And so you can see the summary on the screen. And again, remember, 5% of the dividend portfolio, the total money that could be at stake is $5,000. And so now I have a few columns here. First and foremost, I'm just bringing in cells from further up in the spreadsheet. So I bring in those realized losses of $12,500. I bring in those realized gains of $6,260. But again, I don't include the principal that I took out. Principal took out is retired and could put back into another speculative investment, but it can't be counted as a gain. Next, I take unrealized losses out, and I put them in the right-hand column. In the left-hand column on the next row, I show what principal is still tied up associated with those unrealized losses. That's $4,650. Next, I've got unrealized gains, and that's minus principal. I have that in the right-hand column, and in the left-hand column, I have principal tied up that's related to these unrealized gains. Again, all these cells just mentioned are literally just pulled from the tables that we just went through above. And so now I start summarizing things, and in the left-hand side, how much of my principal is tied up just in speculative investments? $9,650. Obviously, more than the $5,000 technically that should be allocated. And then what has been the total gain or total loss? Okay, well, what I do is I put a negative sign next to the red cells and a positive sign next to the green cells. And it turns out that, hey, after all of this speculation over the years, I've got a total gain of $29.10. And it just so happens that the realized losses and unrealized losses, they are not as large as the realized gains and unrealized gains. And so that's a good thing. And so I have what now is kind of my net total money at stake. If you look at the next cell on the left column, basically what I do is I take, okay, let's take the principal that's just in this stuff, but let's subtract out the losses and gains. In this case, it's gains. And so it brings the total money at stake down from $9,650 down to $6,740. Now, $6,740 is greater than the $5,000 I should have at stake. It's greater, as you can see in the yellow cell, by $1,740. And so, at this time, if I want to speculate more, what I need to do is one of two things. I can take the easy route out and just increase my allocation from 5% to something higher, say 7.5% or 10%. That's the easy way out. But the harder way out is adding more money to dividend stocks. What I could do is, instead of my portfolio value, say, being $100,000 in these dividend stocks, what if my portfolio value got to $200,000? At that point, 5% of $200,000 is $10,000. And all of a sudden, that would free up some capital for more speculation. I guess the third way that theoretically more capital could be freed up with speculation is I could have more gains on the speculative investments that I have right now, and over time update the spreadsheet to reflect those gains, and it could make the numbers look better. But just as easily, I could also have more losses, which make the numbers work worse. And so I know this has been so far a very technical video today. I hope you have been with me so far. Please smash that like button if you've enjoyed this video so far. I put a lot of work into this spreadsheet. I know it's not perfect. I know there's probably things that could be improved on the spreadsheet. Maybe mathematically speaking, if you're a PhD, you might look at this and be, hey, Ian, but I would have done it this way or that. But what I'm saying is this is what I use to keep myself honest. This is how I do it. How I take all of the data points into account as a dividend investor who does not want to get off track, as a dividend investor who does have a passion for other things like angel investments, although I won't be doing any more of those. My wife won't let me, and I'm thankful for her taking that stance. And honestly, I don't want to after what I've been through. I'd have to be a full-time angel investor to be really good at it. That's what I've concluded, and it's just not my passion. But I do have a passion for cryptocurrencies, and I have exposure to those right now. For example, this is the spreadsheet I use to keep myself honest and to account for all of that prior history and prior losses, to make sure I'm not acting like that hypothetical example at the beginning of the video and sabotaging the success of my foundation, which is the dividends. Because the foundation, the 95%, always has to be put first. And so with that, I want to share a few notes. Check it out on the screen right now. And so next, when I was doing this exercise, this is just hypothetical. I was just putting in random numbers. But also when I did a version for myself with the real numbers, and I'm going to go through that. I'm going to go through that later and share some of my insights. And one of the things, though, that I decided to do is I left off gains from employee stock options. Over the years, I've been blessed. My wife has been blessed. Companies we've worked at have done well. Not all of them, but some of them. And we've made money on employee stock options and also RSUs, restricted stock units. However, I want to be conservative, and so I don't want to include those in here as gains, because there's a lot of ways to game any model. You can take any data set and anyone can manipulate the numbers. That's not the point of this. The point of this isn't to manipulate numbers. It's to take a conservative look at how much capital I can put at risk in these speculative investments. And so anyways, I look at the RSUs, the employee stock options, as delayed compensation. And so I don't want to get fooled into thinking I can invest in speculation more than I otherwise would. I also, though, do not include opportunity cost losses. Hey, I saw some great opportunity and I missed out on it. I don't want to include that there as a loss, because every day there are thousands of good opportunities. I only need to take one or two of them. There's always good opportunities. This is one of the things that I think so many investors get wrong, that they're like, oh, I have to take this, and if I miss this, it's over for me. No, there's so many opportunities. There's always opportunities. You could miss hundreds of opportunities. It doesn't matter. There's going to be hundreds more. And so I don't include that in here as well. Opportunity cost doesn't matter. Check it out on the screen right now. And so the point of this exercise, and I cannot underscore this enough, is to overstate the losses a bit, understate the gains, make it really, really crystal clear for this dividend investor how much money I can afford to speculate with. Because at the end of the day, for me, the purpose of my portfolio, the purpose of my financial strategy is dividends. And I've shared this on my YouTube channel before, that I literally think my divine purpose, the reason I'm here on this planet, is to invest for cash flow, for dividends. And so that's what I'm all about. But what's interesting, I'll tell you, I'm going to share my speculative strategy at this time. And over the years, it hasn't been perfect, but on a go forward basis, as I look through my current strategy, even though I'm speculating, I'm trying to at least do that from a cash flow standpoint, because cash flow is literally in my blood. That's how I do it. I am all about cash flow. And so whether I'm investing in real estate, whether I'm investing in my dividends, which is what I talk about here all day long, and I'll get into some of those stocks in a minute that I bought in the last week, and whether I'm looking at speculation, I look at it through a cash flow standpoint. And so with that, let me talk about my personal situation. Check it out on the screen right now. And so I'm willing to speculate with up to 5% of my portfolio. Now, I'll tell you, I ran this model that I prepared for everyone today, and I used real numbers, real data on my personal situation right now. And I'm at 5.77%. So I'm a little above my 5% goal, factoring in all the historical gains, losses, unrealized losses, all that good stuff. But I'm good with that. I'm right around my goal. Now, I have some speculative stuff that I'm doing right now that could take me up to maybe 7.5%. But that being said, I'm working very, very, very hard now to be frugal. I'm working very hard now to get my money working for me. So many of you have been thinking recently on Twitter, if you've checked me out, Ian, why are you putting so much money into dividend stocks? One, I see a lot of good opportunities now, like Campbell's Soup, like Kimberly-Clark. Those are solid values. Church and Dwight, not a solid value, but it's okay. The reason I'm doing that is I need my base to just keep growing. And when I see value in a dividend stock, I'm always going to go for that. And so I'm doing that because the bigger my base is, that small percentage for speculation, it'll rationalize in my mind. It'll make the model work out. It'll get me as close as possible to my 5%. Let's keep going. Check it out on the screen right now. And so how am I speculating right now? Well, I'm in Bitcoin. I started getting in late 2018, and it's worked out great for me. I've made a lot of mistakes with my speculation over the years, but Bitcoin has always been good to me. And I would say this is something that I really have a passion for. I have a computer science degree from Stanford University. I've always been interested in these kinds of things. And Bitcoin in particular has been a cryptocurrency that I've believed in over the years. And I just think, aside from making money on it, I think it's really cool. And I think that's just such an important thing to underscore. Why do I love dividend stocks so much? It's just part of who I am. Why am I good at dividend stocks? Because I love dividend stocks. If you're here and you don't love dividend stocks, you love tech stocks, it may make sense to think, hey, maybe tech stocks are a better avenue. I think in life, we have to all do what we love. We have to be around our core purpose. And so just with dividend investing, as with speculation, I love Bitcoin. I love it. I think it's really cool. And it's a topic I love to learn more about. And I'm always learning about. And so, sure, that probably makes more sense for my speculation than going after something I have no interest in. And honestly, if I look in the past at what I've done with some of these angel investments, not all of them, but some of them, hey, I was investing in smart people, but did I really care about the product they were building? Was it really going to change the world? Did I really have that much faith in their product? In hindsight, no. And so that's a lesson for me. Let's keep going. Check it out on the screen right now. And so, angel investment number 3, and it's doing okay. I'm assuming a 25% loss due to illiquidity. One of the things I want to point out, actually, before I go on, is angel investment 3. One of the things I love about them so much is I really do believe in their company. And also, they have talked over the years about at a certain time paying dividends out to their shareholders. And so it does align with my dividend strategy. Now, Bitcoin, one of the things that's so exciting about it, yeah, it is speculation, but it aligns with my dividend strategy in the sense that now it is possible to earn interest on this asset. It's possible. I don't have to buy low, sell high. I can just hold. And as I hold it, I can earn interest on it. I'm going to talk more about that in a minute. Let's keep going. Check it out on the screen. What else is part of my speculative strategy now? I own some altcoins. I own the VGX, the Voyager token. I recently opened a Voyager account. I want to give a shout out to a community member there, Daniel R. I don't want to say your last name because I don't know if you want to, I don't know if you feel comfortable with that or not. But Daniel, my friend, I hope we get to meet in person one day. He brought it to me. There's some other members of the community that have mentioned this to me as well. And so I signed up for the Voyager app recently and have been really excited and impressed with it. Basically, it reignited a passion in me, quite frankly, for cryptocurrencies. And so anyways, I owned the native token of the Voyager app. I am going to talk more about this, I would say, in some future content, whether it's here or on Patreon. But basically what Voyager is it's an app that allows anyone in the United States, I think except the state of New York, to purchase cryptocurrencies, Bitcoin, very, very easily. And so when I got started in Bitcoin, there wasn't Voyager, and so I was buying Bitcoin elsewhere. And what's so exciting about trying out Voyager recently is it's really easy. Now, please be mindful. I didn't jump on the Robinhood craze, but I know a lot of people love Robinhood out here, and more power to you. I'm glad it's worked for you. I didn't jump on M1 Finance. Same thing. I know a lot of people love M1 Finance. It just for me, didn't really fit my personal situation, but I know a lot of people love it. And maybe I'll change my mind at some point in the future. Maybe I will use Robinhood or M1, but right now I'm okay with those. But I'll tell you, with Voyager, I am on the Voyager bandwagon and I really enjoy the app. And so that is an app I'm using right now to accumulate crypto as part of my speculative investment portfolio in a very, very small way. And one thing I wanted to share with all of you today, if you enjoy my videos, if you want to learn more about cryptocurrency, one of the things I think is important is whether someone wants to invest in crypto or not, it is going to be part of our future. And so I think it's important just to learn, just to dabble around, poke around, if you will, and just learn about things. And so anyway, I want to share with you today, I'll include it in the pinned comment below. I do have an affiliate referral link. And so in terms of full disclosure, I am a referral affiliate of the Voyager app. But if you go ahead and use my code to sign up for Voyager, you will get $25 in free Bitcoin. Also, I will get $25 of free Bitcoin. So it's really a win-win. All you would have to do is sign up for the app, deposit $100 and then invest that $100 into some kind of crypto token, cryptocurrency, and that could include Bitcoin, for example. And so if you are not on Voyager already, you want to learn more about crypto, you're kind of interested about this kind of stuff, I would encourage you, consider checking out Voyager, consider using my referral link because it is a great way to support my YouTube channel and the knowledge, the insights, my journey that I'm bringing forth here on PPC Ian. But anyways, one of the things I like about Voyager, and it opened my mind. Now I'm going to tell you, I'm jumping around here, but I have to because that's how I piece together my story. A few videos ago, I shared how this whole DeFi, decentralized finance, I was up late at night trying to research it. I got a headache. I gave up. The reason for that is I'm an old school kind of Bitcoin guy from the earlier days of cryptocurrency where I'm like, hey, not the early days. I'm not bragging or anything. In late 2018 in my current tranche. But basically, that's what I remember. And at that time, there was only so many tokens. It was like Bitcoin, Ethereum, Litecoin, few others. But recently, last few years, there's been an explosion of activity in the space, and a lot of it is in this DeFi. And originally, I just kind of pushed it away. I said, look, I'm looking into this. I can't quite understand it, and so I'm going to give up, and I got a headache. And that was my knee-jerk reaction. Since then, and thankfully since members of the community kind of brought this Voyager to me, Voyager's kind of been my gateway to slowly but surely just dabbling around with smaller amounts of money just to educate myself more than anything, education. And so anyway, I am starting to learn more about DeFi, and I got to say, I believe it is the future. I've changed my mind, and that's so important. That's been a message in my last video. That's a message in this video. It's a message for when you at home go through the spreadsheet. You got to be humble. You got to be willing to change your mind. You got to be willing to point out your mistakes, change your mind, be willing to say, hey, Ian, I was wrong. That is okay. We're all learning. We're all on our own journeys, whether it's with dividend investing or speculation or anything else, or just learning about crypto. But anyways, that's where I'm at now. And why I love Voyager so much and what it taught me about crypto is the Bitcoin in the Voyager app. It can earn interest. I can deposit US dollars in the Voyager app, convert them to a stable coin, USDC, earn interest on it. If I buy the Voyager token and I get at least 500 Voyager tokens, not only do I earn interest on the Voyager token, but the Voyager token bumps my interest rate that I'm getting on my other cryptos. And so this was a key realization to me. No longer is this asset class for me buy low, sell high. Now this asset class is buy low, hold forever, and earn interest, earn cash flow. So I'm earning cash flow on my speculation right now, which is really interesting. Who knows how it'll all end up? This is very risky. It could all go to zero. That's what's so important to realize with speculation. And one of the reasons I went through my last video is on those angel investments 1 and 2. I wiped out massive amounts of money on those, and it was painful. And that could happen with my Bitcoin crypto that I own right now. And so that's possible. Let's keep going. Check it out on the screen. What else is part of my personal strategy right now as it pertains to speculation? I am buying a few altcoins, and so I talked about VGX. Also, I like Algorand and a few others. And as mentioned earlier in the video, I do plan to participate in the Coinbase IPO. Yes, I understand Voyager is also already publicly traded. The reason I want the Coinbase IPO is I believe that's the Google, if you will, the Amazon, if you will, of the space. And so and I really believe in that company. I think it's a great company. And so it will be a non-dividend stock that I own. Now, what I plan to do to make, I've kind of challenged myself these days, even when I speculate in this 5%, I need to make sure there's some kind of cash flow attached to it. And so Algorand actually pays a staking reward. It pays a dividend, if you will, an interest rate, if you will. So it is cash flow related. We know with Voyager, it's opened up a world of this type of stuff. And there's other networks or other platforms other than Voyager, but I really like Voyager because of its ease of use. It just brings this stuff, makes it easy for anyone to dabble around, get started, and learn more. And the company is just growing by leaps and bounds. And so, by the way, when I signed up for Voyager, there is a wait list, but typically I was the wait list, I think it only lasts for like a day. I was on and off the wait list the same day, but I don't think it would take more than 1 or 2 days to get off of the wait list. It's usually pretty quick. But with a Coinbase, what I'm thinking is when I do purchase those shares, when it IPOs, I'm going to purchase round lots. And I don't plan to ever probably do this, but I want to purchase round lots so I do have the opportunity. These are lots of hundreds of shares. I don't know what it's going to be trading at, but so I don't know how much I'll buy, but I want to try if I can to get a round lot because at least there would then be the possibility for a cash flow component to that speculation by writing covered calls. But I don't think I would ever write covered calls because I don't want it to get called away. But I want to leave that open because, again, I'm challenging myself even within this 5%. I need to have some kind of cash flow element to it because that's what I'm all about. That's what I love. Okay, so with all of this, I'm going to go into just a little bit more before I conclude the video today. Check it out on the screen right now. It's time to just go through some of my recent dividend purchases. And so with all this speculation, my speculative amount may go from 5.77%, maybe as high as 7.5% in the short run. And so to get my speculation percentage back down to where it needs to be, I need to do what I do best. And I need to deploy more money in dividends. And so I bought some Church and Dwight on March 1st. You can see it on the screen, the March 1st tranche. This one wasn't the best value, but I do like that the price per share is trending down. And as it notches down a few dollars here and there, I keep buying and buying and buying. And so I hope it notches down a lot more. And I'll tell you, Church and Dwight is yielding a dividend yield of only 1.3%, and the starting PE on 2021 earnings is 26. 2022 earnings PE is 24. And so there's no bargain basement here, but this is growth. And this kind of is about as high up in my core dividend stocks as it gets. before I start getting to speculation. That's what's exciting. And from the beginning of the year this year, I highlighted how I really am focused on growth, on the top of what I'm doing on my overall dividend and financial flow chart that I've shared with all of you. And so Church and Dwight is up there towards the top. I got to go for that. But I've also been going for some core stocks and some ancillary stocks too that aren't growing as quickly, that provide very solid dividend yields because they are exhibiting a lot of value. So check it out on the screen right now. I just bought more Kimberly-Clark on February 25th, and I bought it at a PE ratio of in the 16.87 on the current year, 16.11 on next year, starting a dividend yield of 3.5%. I like the payout ratio that's only 58%. I would have guessed it would be higher for Kimberly. The dividend's growing a little bit slower than Church and Dwight. Kimberly's 5-year dividend compound annual growth rate is only 4.4%, but not bad. Church and Dwight's is up at 7.3%. And so with that, the third dividend stock that I purchased recently, and don't worry, there's more on the way, and I share all of these on Twitter. I need to just keep pushing towards my goals at dividend investing. Check it out on the screen right now. I want to go through Campbell's Soup. I bought some Campbell's Soup on the 23rd of February, and I bought it at a PE ratio, which is just amazing, of 15. 15 this year, 15 next year, 48% payout ratio, dividend yield of 3.2%, and they are growing the dividend as well, not very quickly. Only 3.5% over the last 5 years, but there is a lot of room to grow. And so I'll tell you, man, lately I have been really busy. So thank you all for hanging in there on the video today. And I hope I wasn't too scattered. I love you all. And so if you want more exclusive content, I have a Patreon. I will link to it in the pinned comment below. I have over 100 patrons over there supporting me. Thank you so much, everyone. It means the world to me. And I'm uploading videos there as well each week, or not every week, but almost every week. And the last video that I uploaded recently was like a 28-minute video. So it's some longer content there, as well as shorter content. And so I got that. And it's so exciting, and I really appreciate everyone's support there. And I really appreciate just all the likes, the subscriptions, and if you are interested in Voyager as well, check it out. It is a really, really cool thing. But the reason I'm kind of closing out this way is I want to tell another story. This video is very important. I think with the global pandemic, with the speed at which technology is growing, we're seeing a lot of changes just in the society now. We're seeing a lot of changes where we're spending more time perhaps in front of the computer. We're spending more time just in front of screens, watching Netflix, for example. We're getting a little less sleep. Things are just weird with the pandemic. And I'll tell you, I feel this because I'm a family man, married, amazing wife, and we have 2 kids. And it's been interesting, to say the least, with shelter in place over the last year and the pandemic, and kids at home for lots of hours while trying to work and keep a tidy house. Sometimes you don't get as much sleep as you need. Sometimes life is just a little bit wacky. And what I'm trying to say, that backdrop, and I'll give you an example. I was in my office earlier today, and I locked myself out of the office. I had to call the landlord, and bless him, his wife showed up and unlocked the door for me within like 20 minutes. And so I was so thankful for that. But I'll tell you something else weird. I own stock in Coca-Cola. I love this company. I was at Costco the other day with my wife, and I was just waiting. She was looking at something, and I saw this man get a huge thing of Coca-Cola Classic, like a big one, like 32 of them or 36 of them, crate of them, put it in his shopping cart. This is so embarrassing. I said out loud, "Good man." And I think he might have even heard me say "good man." Man, and Ian, who's maybe a little bit more alert, a little more sleep, who knows if I would have done that. But it was kind of embarrassing. But hey, I'm a Coca-Cola shareholder, and I love the company. But what I'm trying to say is, with this kind of backdrop, I am sure at least some of you watching can relate to me and the struggles, if you will, of 2020, 2021, and just kind of feeling sometimes like life is a bit crazy. And the reason I want to illustrate all of this is not to embarrass myself further, but basically to say that with this backdrop, it's really possible to speculate too much. I think a lot of people, maybe their life, it's not just a bit wacky and crazy. It's more like, hey, things are getting bad. And when things get bad, people want to speculate because they believe they can make a lot of money quickly. That is so risky, and speculation should never come from that place. And that's the final comment I want to leave today, because I do a little bit of speculation, but honestly, when my portfolio was smaller, I don't know if I would speculate at all. I would just want to focus. Well, I did, but I'm saying if I were to do it again, hypothetically, I would rather just focus on building a foundation, building a base, brick by brick, in dividend stocks, because that's what's trustworthy and what's going to take the stress off, what's going to make life better, what's going to make things just easier is that financial security, that safety net. And the safety net doesn't come from the speculation. It could if you just make a huge amount of money on Bitcoin, for example, going through the roof. But the predictable, carefree way to do it is through dividends, historically speaking. And that's just something I want to leave you all with, because I certainly don't want the video today to hype up speculation. I'm doing it because I want to share my journey with all of you. And I think it's important to be transparent, to see what I'm living through. And I want to document that. But I think it's really important to focus on the fact that in the society we live in, the way things are going, psychologically speaking, a lot of us are prone to take risks now. A lot of us are prone now to take on undue risk. And that is so risky. And that's not a good place for speculation to come from. That could lead to a gambling-like situation where it's not just speculation. It's like literally gambling. And that is so risky. And that's why I practice and preach dividends all day long. And that's what's worked so well for me over the long run, getting to where I am. And you can even see through the case example today that speculation for me, it hasn't been a home run yet. It hasn't been hit the ball out of the park. Now, I still have hope. And I feel like my speculative strategy has improved over the years, just like my dividends. But where I have hit the ball out of the park, where I have hit home runs time and time and time again, as has been documented here on my channel, has been through dividend stocks, not through speculation. And so, but yet I still do speculate because it's part of my human nature. It's part of what I want to do. But so important to understand that. Before I leave today, in terms of a full disclosure, I own the stocks mentioned today. I am long Coca-Cola Company. Good man to the man at Costco buying all the Coca-Cola. I am long Kimberly-Clark, ticker symbol KMB. Coca-Cola's ticker KO. I am long, which ones? Campbell's Soup, ticker symbol CPB. I am long Bitcoin, ticker symbol BTC. I am long Voyager token, ticker symbol VGX, Algorand, ticker symbol ALGO. I'm probably soon to be long Coinbase IPO. We'll see when that COIN debuts any day now. Sometime most likely in March. We will see about that. And so I am long all of those stocks and assets just mentioned. Also, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Just sharing my personal journey here on YouTube for fun and entertainment. Just sharing my journey. It's so possible to lose a lot of money in the stock market, especially with the topic mentioned today, like speculation. I love you all. Let me know in the comments below what you think. I will see you in the next dividend investing video.